Hi, welcome. It's Mary Ellen McGonagle here with your weekly Edge show for Friday, May 5th. Today, as usual, we're going to take a look at where the broader markets close and what we can be on the lookout for going forward so that I can help prepare you for not only next week, but beyond. We're also going to take a look at some of those headline news that drove price action this week, as well as look behind the markets and see what may or may not be taking place by way of sector and industry group rotation. Last up, viewer question of the week, and this week it is all about those mega cap FANG stocks. And the question is, which FANG stock would you be a buyer of? Would I recommend at this point in time? And we're going to review each of those FANG names, and I will share with you the name that not only looks the most constructive at this time, but also a name that is in the very early stages of beginning to reverse its downtrend. So from here, let's take a look at some of those economic data points that drove price action last week. First up was the all-important Federal Reserve meeting and their interest rate hike announcement, as well as comments after their meeting, where Fed Chair Powell talked about pausing interest rates at this time and regarding possible future hikes. This wording was softened so that there is definite risk imminent in raising rates. The banking crisis is still near, so other elements as well. And by and large, the markets did pull back subsequent to that. However, we did experience a nice rally today, which we'll review, and I'll share with you why. Also, we did get jobs data quite a bit this week, and U.S. job openings fell to a two-year low. That was earlier in the week, and that's generally viewed as good news. The Federal Reserve wants to see employment being reduced so that inflation would then be lowered. However, midweek, private sector employment jumped to a 9-month high. And from there, we did get news that the service sector of the economy is continuing to grow while the manufacturing activity remains flat. So as you can see, we are getting very much in the way of mixed data, which is causing uncertainty and then hence the choppiness that we're seeing in the markets. Today, however, we did get news that the April jobs report showed a very strong increase and wages rose sharply. This is not good news. Again, the Federal Reserve has been all about trying to reduce employment, get those wages down so that spending would be decreased and hence inflation. However, the markets today did rally sharply. We'll get into that. Now, next week, we are going to get important inflation data by way of that core consumer price index on Wednesday, and then on Thursday, core producer price index. And that PPI number on Thursday is more closely watched by the Federal Reserve as a gauge for inflation, but anticipate volatility around those reports. From here, let's go ahead and take a look. Where did the markets close for the week? And here we are with a daily price chart of the S&P 500, and I've marked it up so that you can have a good sense of where support and resistance is. And until we break either of those levels, I anticipate that we will remain in this choppy period. So looking at where we closed for the week, we can see that the S&P was able to close above this 10 and 21-day simple moving average. That was near-term resistance, so that is good news. From there, your next area of upside resistance is this key 4,200 level. So if we can break above that and remain above that for at least 5 trading days, that would be very good news for the near-term prospects of a continuation rally in the S&P 500. Relative to any further pullbacks, you will want to pay attention to this 50-day simple moving average, and we were able to find support there on 2 recent pullbacks. A break below that 50-day moving average on heavy volume would not be constructive. So again, in that basic choppiness period, until we see any movement above or below, resistance and support. Now, on to those momentum indicators. The RSI is now above 50 and trending higher. We can see this faster moving stochastics did end the week below 50 and in negative territory. So bit of a mixed. We will need to see more in the way of upside price action here to anticipate further upside movement, but the net of it at the end of this week is neutral with a positive bias. So from here, I do want to share a view of the equal weighted S&P 500. In other words, those heavy cap FANG stocks that we're going to be talking about at the end here will not have an impact on this view of the S&P. Each name has an equal weight. So let's take a look. We can see it's a lot different looking than the natural S&P 500 index. We are now languishing below these key moving averages. Your momentum is very, very flat here as we move back and forth. Likewise with that RSI waffling between positive and negative. So net, while today's 1.8% rally in the S&P equal weighted index is constructive as it relates to broadening out in the markets, overall we do still have work to do, but we will want to see more in the way of broad-based participation that will be seen in this index and then translate to further upside in the broader S&P index. So let's move on from here. Take a look at the 11 underlying sectors within the S&P 500. And I've gone ahead and added an RSI, and the sectors are sorted in descending order. Strength to weakness. And take a look, Staples still up here at the forefront, clearly outperforming. They did pull back with the markets, found support, and are back in rally mode. The group has a number of heavyweights that are continuing to see increased sales despite increasing their pricing among these products, these staples products that are needed. From here, let's take a look at technology. And technology was the top performer for the week. It was up about 0.3%, but that compares to a negative 0.9 on the S&P. And we can see this nice jump higher in the technology sector on its way to a potential one-month base breakout, which would be quite constructive. But more importantly, within technology, there are two heavyweight names in here that account for over 42% of this index's weighting. That is Apple and Microsoft, and both stocks were positive for the week. We'll get into that with our review of the FANG stocks. So from here, let's take a look at some of these other groups up here at the forefront. Healthcare was flat for the week while the markets were down. That's good news. I'll share with you where the strength was there, but generally we do still have positive momentum in these healthcare names, and that from my work is good news because we have not only a defensive aspect to healthcare stocks, but there is also a growth component among some of these medical product names that are on the move. From here, we're going to take a look at some of these underperforming areas, and first up is energy. The group was down almost 6%, and we can see this sharp drop taking shape here. It was all about oil and the price of oil. I'll share that with you, as well as supply-demand issues. So we can see this break below key support with that energy sector, that any potential uptrend has clearly been reversed. Also want to share with you the financial sector, down 2.6% for the week. Had a nice 2.5% rally today on that move into bank stocks. We'll look at that. And then also other areas that are reporting strong earnings in that financial sector, but net very sloppy and in a downtrend. And I did mention to you that I would share with you why stocks rallied today in the face of strong employment numbers. And it is because we did see that move into bank stocks today, a receding, at least one day receding, of the deterioration among regional bank stocks. So let's take a quick look here. These are ETFs that I find very useful in helping get your arms around what's taking place beneath the surface of the markets. And here we are with KRE. This is that regional banking ETF. It did rally 6.3% today. And so there was a bit of a moving away from that banking fear crisis, which helped support the markets today, and then also strong earnings from Apple. We'll get into that at the end here as well. But moving on to some of the other areas that experienced strength, and this is going to be throughout the week, not just today, and this is GLD, the ETF for gold stocks. You can see it did pull back today as those banking fears receded a bit, but overall we did experience a nice uptrend. The pullback found support at this 10 and 21 day simple moving average, nice MACD crossover on the daily. So overall, the ETF gold does still remain constructive. Let's go ahead and take a look at some of these other ETFs up here at the forefront, exhibiting relative strength. And here we are with IBB, that's that NASDAQ Biotech ETF, nice uptrend shaping up in an otherwise flat to down market. And we are seeing strong numbers, results coming out among some of these names in the biotech space. And in turn, that is helping the healthcare sector fare well. Moving along, again, being aware of those weaker areas, this is that view of Brent crude oil down 10% for the week to a $72 price. And that's a per barrel price that's not going to be as helpful, of course, with these energy stocks and their earnings going forward. And then one other area that we can take a look at that is in the beginning of potentially reversing its downtrend, and that is semiconductor stocks. This is SOXX. We do have higher lows. I will need to see a break above these moving averages, get these momentum indicators above these dashed neutral lines and into positive territory to help support that potential possibility, but definitely on my radar. So from here, let's go ahead and take a close look at those mega cap FANG stocks, and I've added Tesla as well. It's a 2-month daily price chart view, and I've added that RSI, that relative strength indicator. Let's go ahead and move through each name, because whether you will in fact get involved with any of the names will have to do with the health or weakness of the chart, but also your style of investing. So first up, we'll take a look at Apple. Again, came out with very strong numbers. The stock moved 4.6% higher on the day. Very big volume, indicating potential further upside. When you see this type of gap up on an earnings release with any given stock, it's always helpful to take a look at historical precedents with that particular name. How does that stock perform beyond a gap up? And in this case, very, very natural. Oftentimes the stock will see a nice continuation rally and then a period of consolidation as it waits for that 10-day simple moving average to essentially catch up to the price. Now, price action beyond this, because we are entering into an uptrend. In fact, I will mark this up further because Apple at this juncture in February was poised to break out of this high tight flag formation after moving above the highs there. However, broader market weakness came into play. Once that broader market weakness was removed, Apple went on to rally. So at this point in time, we have that gap up. The volume today indicates further near-term upside, at least one day, and beyond that, a potential period of consolidation. From there, it's going to be all about how the broader markets fare and whether that will continue higher if the markets also trade higher. I anticipate Apple to continue to do so as well. We do have positive momentum with that RSI and MACD up here in positive territory. So let's go ahead back, take a look at the next name among these mega cap FANG stocks. And here we are with Amazon, and I will tell you, it is not looking attractive from my work. A couple of reasons why. Primarily is the fact that this is a pullback with the broader markets. However, we are back below this key 200-day simple moving average, and we need only look back to this February period, a gap up above it. It was denied. So I will want to see Amazon break back above that 200-day and continue to trade above it for more than just this one day. In turn, what will take place is these other shorter term moving averages will begin to trend higher. And once we see them move above the longer term 200-day, that's called a golden cross. From there, we can be on the lookout for further potential upside. We do have positive momentum with the RSI and MACD, so that's good news. This blue 200-day is the next area or barrier to potential upside with Amazon, so it is not my favorite at this point in time. From here, let's take a look at Facebook, and this is exactly indicative of what I talked about when a stock gaps up, particularly in response to strong numbers. And this is Meta. I did say Facebook, but let's take a look. Here is that gap up on strong earnings. Just as advertised, it is pulling back until that 10-day moving average catches up to the price. We did see that same price action back here in February, but again, broader market action did hold the stock back. We did get that February pullback in the broader markets. Once that was resolved, Facebook did go on to trend higher. So again, it's going to be all about how the broader markets behave, but this pullback to that 10-day, very orderly, very constructive. I'm on the lookout for further upside with Meta, dependent again on the broader markets. So from here, we're going to take a quick look at Google or Alphabet, and we can see it's been very much in a back and fill trading range. Earnings were pretty good. I will go ahead and shorten this so that we can get a view of what will need to take place for me to turn bullish on Alphabet. At this point in time, again, back and fill chop, the stock was up only 0.8% on a day where the NASDAQ was up more than 2%, not bullish price action. So I will need to see a move back above the 109 level, which is the high of this consolidation. And also I will need to see that MACD crossover. We already have positive RSI, which is good news, but at this time, neutral on Alphabet. Moving along, taking a look at Microsoft, looking really quite good. We can see this gap up last week on earnings, that period of back and fill. This is on my MEM Edge suggested holdings list. It was on there before that gap up. And I had last Sunday talked about this anticipation of a back and fill, very natural after a big move, 10-day on its way to catching up. But we can see that it was up today in line with the broader markets. So this was up. This stock is exhibiting characteristics of a name that will continue to trend higher. Netflix down and out, not positive price action at this point in time. Similar to Alphabet, we are getting a little bit of a back and fill, but it is overall trending downward. We have negative momentum here with that MACD and RSI, so not a favorite at this point in time. Last up, we're going to take a look at Tesla, and this is going to be for those that are nimble, that are on the lookout for a down and out stock that is potentially poised to reverse its downtrend. The stock had a nice day today on news coming out of China. We can see relatively high volume on today's 5.5% rally, very close to getting that RSI back up into positive territory. MACD, we experienced that crossover. From my work, I will want to see that MACD get back up here above that net neutral, get that RSI into positive territory, and then a break above these moving averages. But we could very easily be in the beginning stages of a nice upside rally here in Tesla. That's it for this week. Everyone have a fantastic weekend. I'll look for you again here next Friday.
Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.